Good evening. This is the post-market recap by AGI Era. Today is Friday, January 23, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a mixed bag, with a slight upward bias for growth, but a notable pullback in the Dow. The S&P 500 finished the day up 0.03 cent, settling at 6915.61. Technically, the index is now trading just above the psychological 6900 level, showing resilience but lacking strong conviction for a decisive breakout. The Nasdaq 100 climbed, closing 0.34% higher at 25605.47. The Dow Jones Industrial Average finished down by 0.58%, shedding 285.3 points to close at 49098.71. Crucially, trading volume today was moderate, which implies that while there was some activity, the market's movements lacked the overwhelming institutional conviction that often accompanies significant trend shifts. This suggests a period of consolidation rather than a strong directional push. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, while not providing a current closing print, appears to remain relatively subdued, suggesting this is a controlled rotation rather than widespread panic. We are seeing a clear divergence in sector performance. Money flowed noticeably into technology, XLK, up 0.15 cent, and energy, up 0.56%, while financials, XL.F, lagged significantly, down 1.4%, and utilities, XLU, also saw a slight dip of 0.37. The spread between the leading energy sector and the lagging financials today tells us that investors are favoring sectors tied to commodity strength and selective growth, while showing caution towards interest rate-sensitive areas and traditional value plays. The macro engine room, the primary driver of today's moves, can be traced back to the currency markets. The 10-year Treasury yield data was not immediately available at market close, preventing a direct analysis of its impact. However, the U.S. dollar index is down 0.91%, settling at 97.28, marking a hefty weekly loss. This dollar weakness is significant because it can make U.S.-denominated assets more attractive to foreign investors and can provide a tailwind for commodity prices. Meanwhile, crude oil CL.F is trading around 61.27 cents, up 3.22% on the day, responding positively to the weaker dollar and potentially ongoing supply concerns. The AI and Tech Monitor, turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day up 1.54% at 968. Microsoft closed higher by 3.28%, while Apple slipped 0.15%. Other significant movers in the Magnificent Seven included Amazon up 2.06% and Meta up 1.72%. Alphabet, however, finished down 0.79% at $327.94. The slight weakness in Alphabet today is notable. Our research indicates that investors are weighing strong AI-driven optimism against factors like profit-taking, insider sales, and lingering legal risks. While the broader tech sector, particularly those directly benefiting from AI, continues to show strength, Alphabet's performance suggests a more nuanced sentiment for the search giant. After hours, and looking at the after hours tape right now, shares of Movano Inc., MOVE, are moving significantly, up over 114% in extended trading, indicating a strong reaction to some undisclosed news or development. As we pivot to tomorrow, the calendar brings us the close of a volatile week. Investors should specifically watch for any further developments in geopolitical tensions and the ongoing narrative around inflation and interest rates, which will undoubtedly shape the opening bell next week. The key takeaway for your weekend strategy is to remain agile and consider how the shifting macro landscape, particularly currency movements and sector rotations, might influence your portfolio in the coming days. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.